Okay, class, in this lesson, what I'm going to teach you is the name of the topic is ratios. Now, this is one of the most significant topic in the accounts. Whether it's of O levels, it is of A levels, or you are doing any other certification or any bachelor's program, ratios will always be there wherever you're going to see the heading of accounts or the subject code of accounts. Okay, so we'll be doing this 7707 is the syllabus code, accounting ratios. Now, the other name of ratios is interpretation of accounts. Interpretation of accounts. Okay. Now, interpretation of accounts is also known as financial statements, FS, interpretation of accounts or financial statements. Both are there. Now, how it is tested? Ratios are tested in three ways in the paper. First one is they'll say calculate ratios. What they are going to say? Calculate ratio. Number two, they'll say calculate value. Now, what is the difference? Over here, they will give you the values, they'll give you the income statement or the statement of financial position or the required figures, and they'll say calculate the ratio. Over here, they'll give you the ratio and they'll say calculate the figure. Okay, the value of sales, for example, the value of gross profit, the value of current asset. And the third but most significant portion is of comments. Now, in comments, the examiner may ask for suggestion, for advice, or he simply may ask for a comment. I often refer this part as the theoretical part or the theory part. So whenever you are going to see the question of ratio, it will always be having theory or comments of at least 4 marks out of 20. Now, in P2, it is generally, you can say that generally it is asked for as an independent question. The weightage may vary from 5 to 15 or even 20 marks. There was a time when question number 4 was for sure of ratios, when the recently code has changed, but in old accounts, when it was principle of accounts, the code was 7110. The question number 4 was always of ratios. So since the new pattern is there, this is no more since the new pattern and new syllabus scheme is there, which is 7707. I cannot identify a specific pattern till now, but the examiner one way or another manages to ask somewhere between 5 to 20 marks from the ratios. And from P1, the examiner somewhere asked about 4 MCQs from the ratios. How many MCQs? 4 MCQs. Okay, so this is how the examiner is going to ask and what the ratios are. Now, in our syllabus, the ratios are categorized into two things. Two types. The first type is profitability. The first type is profitability, and the second type is liquidity. The second type is liquidity. Apologies for my spellings. The second type is liquidity. Now, in profitability, we have further ratios. The first ratio is gross profit ratio. And in gross profit, we have two formulas. For gross profit ratio, I have two formulas. What are those two formulas? Those two formulas are GP margin and the other one is GP markup. Now, what is the formula for margin? The formula for margin is gross profit over revenue into 100, and the answer is always in percentage. And what is the formula for GP markup? It is gross profit over cost of sales into 100. The next formula which we have is of profit margin. This is of profit margin. Now, over here I would like to emphasize that this profit margin, it is often known as net profit margin. Now, net profit margin is the old terminology, but you may find it in certain past papers or in some books. Net profit margin, the new updated terminology is profit for the year, and the formula for the profit margin is profit for the year divided by revenue into 100. Two. Now, the third formula from the profitability. You see, I'm going to carry on profitability, only the ratios of profitability. The third formula for the profitability is ROCE, return on capital employed. This is also known as ROCE. This is the common abbreviation for this, ROCE. The formula for this is profit for the year over capital employed into 100. And capital employed is further segregated. The capital employed is further, we have two formulas to calculate capital employed. First formula is owner's equity plus non current liabilities, and the second formula is non current assets plus current assets minus current liabilities. Now, in one way or another, they are going to give you the very same things. Okay? The value you'll get will be the same. Okay, after this, now the next ratio, it is not given in any syllabus. It is not specifically written, but I like to add this to just for the generic knowledge, or for the better understanding. That is the fourth part, the fourth ratio, and it's you won't find it anywhere. This simply the fourth ratio, and I call this ratio A to B ratio. A to B ratio. Now, what is A to B ratio? The examiner may give you any other ratio, and any other. It could be like wages to sales ratio, operating expenses to sales ratio, closing inventory to expenses ratio. No matter how insane or whatever the ratios is, what you need to understand over here is that whatever it is written first, it will be numerator, and whatever it is written after 2, it will be denominator, and then you'll simply multiply it with 100. So this is just add-on knowledge for the papers. Now, how are the ratios interpreted, or how the question is going to test it? To do the question of ratios, you must have basic understanding of income statement. What you should have? The basic understanding of income statement. Now, in income statement, what else do we what you should know? You should know the format of income statement. What is the format of income statement? Above all, we write revenue, then we less cost of sales, and the breakup of cost of sales is opening inventory, add purchases, less closing inventory, and I'm going to draw one over here for you. We have then gross profit, all the figures are assumed one. Let's say this is 100,000, this is 100, this is 700, and this is 300. We are going to subtract it, and what do I have is 700 plus 1 8, and 3 500. My gross profit would be 500. After that, these figures won't be like justified. Let's make it 200. This would be 600, and this would be 400, just for better understanding. 400. Then we have expenses, and expenses could be rent, heat and light, and whatever the expenses are. Let's say we add up all of those, and I'm going to once again 50, 50, 50, and then one more 50, and the total expenses are for 200, and what I have is 200 as profit for the year. That's it. Profit for the year. That's it. Now, you must have the basic understanding of income statement in order to solve the question of ratios. Now, That's all for this specific video. In the next video, we'll be doing liquidity ratios.